Hello guys, welcome back to another video. This is your performance management teacher Sir Uzair Awan, and in today's video we'll be covering the chapter of cost volume profit CVP analysis. Now the way that we'll be covering this chapter is, as you can see, that I have the study hub content on a PDF. So we'll be using the content from the study hub, as well as most of the topics I'll be explaining on my OneNote. Okay, so we'll be interchangeably using both of these things, and we'll try to understand this chapter in the most easiest way possible. All right, so let's start with the chapter. Okay, so CVP, cost volume profit. First of all, we have to understand what is cost volume profit. So remember that cost volume profit is basically the study of interrelation. It's the study of interrelation between three things: costs, volumes, and profits. These three things. Okay, it's the study of interrelation between cost, volume, and profits, right? Now, whenever you talk about the business, you know that every business wants to maximize the profit, but at the start, it wants to reach no profit. At the start, it wants to reach no profit, no loss, or what we call the break even point. Okay, every business wants to maximize their profit. That is true. We all can agree on that, right? But at the start, no one can, no one has the objective to make profit. Their first objective is to reach a break even point, and break even is the point where there is neither a profit nor there is a loss. That's called a break even point, right? Therefore, it computes how many units the company need to sell in order to avoid any loss, and this is called the break even point in units. Now this is break even is the area that is going to be the first one that we'll start with, right? We have a little introduction over here, that what is break even. Break even is the point where there is no profit and not even loss, right? So no profit, no loss, no profit, no loss, that is your break even. And if you calculate the number of units that you will have to sell in order to achieve the break even point, then those are called your break even units. Okay, so CVP analysis is basically the interrelation, it's the study of the interrelation between cost, volume, and profit. Okay, and the first thing that we have discussed is the break even, that what is break even and what are break even units. Okay, now the real question is that, okay, we know what are break even, now we know what are break even units, but how do you calculate them? Because the calculations are very important, as you will be using these formulas to calculate break even points in units and revenues in the questions. Okay, so first of all, how do you calculate the break even point in units? In units, that how many units do I need to sell in order to achieve the break even? So remember that you always take your total fixed cost. You always take your total fixed cost from the question. Okay, and you are going to divide it by contribution per unit in order to get the break even units, that how many units I need to sell in order to achieve the break even, which is the point at which the company incurs no profit, no loss. Okay, so total fixed cost divided by contribution per unit, contribution per unit, right? Now, when we talk about contribution per unit, when we talk about contribution per unit, right? You guys already know that you can get contribution per unit by subtracting the selling price from the variable cost, right? You will have your selling price, you're going to subtract the variable cost from it, right? All variable cost from it, right? And that's how you'll get your contribution, right? So you get your contribution like this: contribution per unit, you take the selling price per unit, you subtract it with all the variable costs that are being incurred to make that particular unit, and you, once you subtract these, you get your contribution per unit. And total fixed cost is always given to you in the question, right? So you will take the total fixed cost divided by the contribution per unit, and you'll have your break even points in terms of units, that in units how many do I need to sell in order to achieve the break even. Is this clear? Okay, now the second formula that you need to remember is how to calculate the break even point, but this time in terms of revenue. Now how is this different than the first one? Because in the first one we were basically calculating that how many units I need to sell in order to achieve the break even point. And now we are going to calculate that how much sales do I need to do in order to achieve the break even point, like in terms of dollars. How much worth of revenue do I need to generate? How much worth of sales do I have to do? What's the revenue that I have to generate in order to achieve my break even? So that is what this formula is all about, right? And how would you calculate that? It's very simple. Just take your break even point in units. Just take your break even points in units, which you will calculate through this formula, the first one, and times it by, multiply it with the selling price per unit. Okay, so you take your break even point in units that you just calculated. You take your break even units and you times it by the selling price per unit to get your break even point in terms of revenue. Okay, that how much revenue I need to generate in order to achieve the break even. Okay, now there is another formula for doing the same thing, for calculating the same thing. Another formula you can use, and you need to know this formula because you never know what you'll have in the question, right? So the other formula that you can use is basically total fixed cost divided by the CS ratio, Okay, so you can divide the total fixed cost with the CS ratio, and what you will get is the same thing. You'll get the break even points in terms of revenue. All right, so you can take your total fixed cost and you can divide it by the CS ratio. Got it? Now what is CS ratio? CS ratio is basically contribution divided by sales, right? Some of you would know this already, but for those who don't, this is basically just contribution divided by your sales, right? This is called CS ratio. Contribution divided by sales, right? So these are the formulas, these are things that we need to remember, right? First thing that we studied was that what is cost, volume, profit. It's basically the study of interrelation between cost, volume, and profit. And then we discussed that yes, every company wants to maximize their profit, but in the initial stage, that is not their main goal. Their main goal is to achieve a break even point, and break even point is where you neither make a loss nor do you make a profit, right? So it's a break even. So all your costs are recovered through your sales, right? But you do not make any profit nor do you make any loss. Okay, so how do you calculate break even point in unit? You just take the total fixed cost divided by contribution per unit. Total fixed cost will always be given to you in the question. Contribution per unit, you can calculate it by subtracting the selling price per unit with the variable cost per unit, and you'll get your contribution per unit. Okay, and then if you have to calculate in terms of revenue, then you just have to take your break even point in terms of unit that you calculated in the first part, right? And you times it by the selling price per unit, you'll have your break even point in terms of revenue. Okay, and you can use another formula for this, which is total fixed cost divided by CS ratio. What is CS ratio? You can take contribution per unit and divide it by selling price per unit. That's one way. And the other way of calculating CS ratio is by taking total contribution and dividing it by total sales. You will have your CS ratio. Okay, so just divide the total fixed cost with the CS ratio and you will have your break even point in terms of revenue. Got it? So far I hope that there is no problem. Now let me just assign you guys a question. Okay, you guys already know the concept now, you guys know the formula, right? So let me write a question over here. Let's say the selling price per unit. Now excuse me for my writing. Okay, selling price per unit is $10. And then we have, let's say, material per unit. The material that is being incurred on a particular unit in making a particular unit is worth $4, right? Then we have labor per unit, which is, let's say, $3. Okay, and of $1 we have our variable cost per unit. Okay guys, So our variable cost per unit is $1, our labor per unit is $3, material per unit is $4, selling price per unit is $10. And like I said, that fixed cost will always be given to you in the question. So let me give you the fixed cost also in my own question. That's gonna be 15,000. Okay, so these are just random value. I'm just trying to make a question. Okay, and what are you required to do in the question? What is the requirement of the question? So basically, you are required to calculate how many let's say units, how many units company should sell, how many unit company should sell to avoid, or let's say to achieve break even. Okay, to achieve break even. And this question says how many units, so they're asking you in terms of units, right? How many units company should sell to achieve break even. Okay, all right, so that's the requirement of the question. And let me just tell you that though the question asks you to calculate the units, but let me just tell you additionally that you should also calculate the revenue, right? What's the break even point in terms of revenue? So you should apply both the formulas because we are here to learn, right? So let's learn. So what you have to do, you have to calculate the break even point in terms of units also and in terms of revenue also. Okay, that is something I've made clear. Now you can pause this video and try this on your own, and then you can resume it to see the solution. All right, okay, so I hope you guys would have tried this question yourself first before watching this video any further. Now I'm going to solve this question and then you can verify your answer, right? So what do I need? I need the break even point in terms of revenue and in terms of unit, right? But first thing first, I need the unit. So break even points in terms of the unit, right? So you guys know what's the formula? Total fixed cost divided by contribution per unit. So total fixed cost is given to me in the question as 15,000, right? Contribution per unit, I don't have that, so I'll calculate that. Selling price is $10, right? And what do I have to subtract from selling price? All the variable costs. So material is a variable cost, right? Which is worth how much? $4. Okay, we have the labor cost, which is worth how much? $3. And we have the variable cost, which is worth $1. So all are these are variable costs, right? So 10 minus 4 is 6, 6 minus 3 is 3, and 3 minus 1 is 2. So we have our contribution worth $2. Okay, so $2 is my contribution. And what was the formula to take out the break even in terms of units? Total fixed cost divided by contribution per unit. So total fixed cost was 15,000 as given to me in the question. Contribution per unit I just calculated is $2. So my break even point units in terms of unit is how much? 7,500 units. Okay, and what if I was supposed to calculate this in terms of revenue? So it's very simple. The first technique, the first formula is very simple. Take your units, break even units 7,500, and multiply it with the selling price per unit, which was $10. So that's gonna be $75,000 of worth of sales. $75,000 worth of sales that I need to achieve in order to achieve my break even, right? And if I apply the other formula, now remember in the exams you don't have to apply two formulas, right? These are two formulas that is used to calculate the same thing. So you have to apply any one formula to get the answer. So in the exam, if you have your units, your break even units, and you have your selling price, you can just multiply both of them to get your break even point in terms of revenue, right? But if you don't, in case you don't, right? So then you're going to use the other second formula, which is that you'll take your total fixed cost, right? So total fixed cost was how much? 15,000, and you're going to divide it by the CS ratio. So CS ratio is basically the contribution to sales ratio, and I told you that you can take total contribution and divide it by total sales, right? Or you can take your contribution per unit, which is $2 over here, and divide it by the selling price per unit, which is $10, right? So it's going to be 1 over 5 after simplification, right? 2 times 1 is 2, 2 times 5 is 10. So that's going to be 1 over 5, and 1 over 5 is basically 0.2. So 15,000 divided by 0.2, you can see that I'm going to get the same answer, $75,000. So either you use this formula or you use the other one. You can see that we are getting the same answer. which is 75,000 and 75,000. All right, is that clear? And the units were 7,500 units. Okay, so 7,500 units to achieve the break even, and $75,000 worth of sale to achieve the break even. Okay, so this was the way to calculate your break even point. Okay, so I hope this concept is clear to you guys. I hope you have understood how to calculate break even points in terms of units, how to calculate break even point in terms of revenue, right? And I hope this little concept is clear. So the first class, we're going to keep it till here. Now you can watch the other video, right, to continue with the lecture. All right, but for today we'll just keep it till here, right? Just try to learn the formulas, look at the example, okay, and then we'll continue in the next class. Till then, take care, goodbye.